Welcome to the lesson on support and resistance. Support and resistance zones, amongst other technical analysis factors, are the most used indicators in trading. Support and resistance occur really often in the market, and that's why many traders use them to trade the Forex market. The support level is a zone where traders plan to go long in the market by opening a buy order. The resistance level then is a zone where traders plan to short the market with a sell order. Support and resistance are formed when the price goes up and down, thus creating support and resistance zones. Now, the zones are very important because they can be very decisive about the next movement in the market. The price can continue up or it can reverse and go down. Support and resistance occur in all time frames, be it a minute, an hour, a day, or anything. In a situation where the price breaks a support zone, the price will continue to fall because the sellers outnumber the buyers. So the price drops even more. But the price doesn't always go down if it breaks support or when the price breaks a resistance zone. You can still trade that resistance with a buy order since the price broke the resistance and you feel that the price will eventually rise even more. Now, this isn't the way you really should trade because support and resistance, although they're important zones, they can also be false signals. If the price breaks support and goes down for a small number of pips and then heads back to the support zone and continues up, well, that's a false signal, and that's known as a fake breakout. A similar example can happen in a resistance zone. When the price breaks a resistance zone and it goes up for some pips, then you open a buy order because you think that the price will continue to rise. But the market can act completely differently and it can go back to test that resistance and the price can continue to fall. So that's how a fake breakout works. And I'll show examples of fake breakouts in the bonus category later. For now, let's continue with some examples on charts so you can understand properly how to recognize support and resistance zones. First, launch MetaTrader 4 so you can learn how to draw horizontal lines and identify support and resistance zones. For this example, I'm using the euro to the Swiss franc currency pair in a 4-hour time frame. And you can probably identify support and resistance zones from the example shown on the slide. The chart shows that the market was trading below 1.1075 price. Then the price surged for a huge amount of pips by creating a sideways trend for some time until the price broke the sideways trend and moved up and down. Now, this is an example of support and resistance zones in the market. Bears are selling on resistance, but the momentum of buyers has created a support zone because they're buying on that zone. So to summarize this example, the resistance zone highlighted in red at 1.08596 shows a strong momentum of sellers in the market. Because the price couldn't go any further up, it's now starting to go down by creating a resistance zone at 1.08596. So the price continued to go further down by creating the support zone highlighted with a yellow horizontal line. Now, the support zone at 1.07939 was formed because the price couldn't break the sideways trend, so it formed a support zone. The close price of the candle now acts as the price of the support zone. The price shifted the direction and it moved up because of the momentum of buyers in the market, which shifted the price further up until it reached the resistance zone. Now, the resistance highlighted in yellow has acted as a zone of sellers in the market, and because of the momentum of the sellers in the market, it became a major resistance zone by pushing the price down. Before I continue showing other examples of support and resistance zones, let me first show you how to use the lines to draw horizontal lines. Choose the Draw Horizontal Line from the toolbar at the top. Then, to place a horizontal line on a support or a resistance zone, right-click your mouse to draw the horizontal line in the price that you want. Now, as you can see, a horizontal appears and it's used to mark support or resistance lines. So if you want to move your support or resistance horizontal line into another price, then you just double-click on that line and then move the horizontal line with your mouse. You can move it up or down to another price. To change the color of a horizontal line to avoid confusion with the same color of trend lines and channels, you simply double click on the horizontal line again and go to Properties, then change the color and click the OK button. Let's move on to another example of support and resistance. This chart shows the British pound against the New Zealand dollar currency pair in a 1-hour time frame. The trend of the chart is not an uptrend or a downtrend, but more of a sideways trend. The yellow line at 1.89181 is the support zone, while the red line is the resistance zone. So you can see the price couldn't break the 3 support zones. Again, a support zone is considered valid even if the candle doesn't close at the same price as the previous candle of the previous support zone. So the candlestick of the 3rd support zone wasn't closed at the horizontal line, but just above that. So you shouldn't ignore that. Why? Because that zone is still valid, and that means the price couldn't break the support zone, but it just tested it again and continued to go up. The resistance zones in this example are really powerful. So maybe you're wondering why the price broke the resistance zone and went down again. Well, that's a fake breakout, as I mentioned earlier in the lesson. The breakout of resistance or support can be a false signal. So the same scenario happened with the resistance zone. The price broke the resistance zone at 1.89981 and it moved up for some pips before coming back down. With this example, I'm finishing the lesson on support and resistance for now. In the next lessons, I'll explain how to trade support and resistance zones using other technical factors like trend lines and channels.